at a global level. We shift our focus now to payments in the developing markets. And I'd like to invite Gunnar Camner from GSMA, Director Mobile Money Services, who will talk about the state of digital finance in the developing world. Gunnar, over to you.
Yeah, cool. Amazing. Good morning, everyone. Thank you, Khurum, for the introduction. Thank you, Leon, for the invitation. It's great to be here. I'm going to talk a little bit about how the mobile money industry is performing in emerging markets.
Is it your first slide?
No, it's not.
Weird.
Cool.
So advance it. That goes back.
Amazing. Thank you. So first, what's the GSMA? So I represent an organization which is a membership organization. So it consists of 800 mobile operators across the globe. And I work with financial services because in emerging markets, as you will soon learn, or as you probably already know, they are very successful in delivering financial services, particularly in sub-Saharan Africa, but increasingly also in other regions. And I think my role is a lot about addressing the fragmentation in the industry. So we have a lot of members. Individually, they're very successful, often in quite small markets or medium-sized markets, but none of them are global players. So a lot of my role is to try and how can we address the fragmentation so that their services become useful, sustainable, and even more profitable and meaningful for their customers. So how big is the mobile money industry? It's 270 or so deployments in 93 countries. It's definitely available where it's needed the most. So in most markets where you have a big issue with financial exclusion, mobile money is there. Non-banks are performing in those markets. 400 million customers registered, 134 million active. So these are quite big numbers in aggregate. As I said, it's made up of a lot of deployment. So again, you see the need for interoperability, the need for collaboration to kind of fully harness and I think realize the potential. As Sasha was saying, how can we make these services even more meaningful than what they are today? So the industry in aggregate processes about 1 billion transactions a month. That's double the amount that PayPal is processing. So again, combined, it's very interesting. It's quite potent. So what I don't know, what are people using it for? So it's definitely mobile money. It's still very much driven by the initial send money home example that I think Sasha mentioned in the beginning. So it's very much people cashing in, sending money, and then their family members cashing it out. It's also a lot about paying your bills and paying utility bills. That's where the ecosystem is beginning to grow. Yeah, this is a lot of our work as well. How can we make sure that this becomes a more diverse set of transactions as an industry? And again, if you look at what transactions look like for the average customer in emerging markets, it's very much about P2P. They do on average about two P2P transactions a month, and a lot of airtime top-ups, and of course utility bill payments is quite prevalent. What's important to call out here is also what are the transactions that aren't happening. So merchant payment isn't really happening. Bulk payments, salary payments, and payroll or government subsidies isn't really happening to the extent it could. So this is an area where we also work with our members to try and have those partnerships. And I think there's a few companies here today that focus particularly on the bulk disbursement opportunity. It's important when we talk about mobile money to also mention agents, I believe. There are 3.2 million of these transaction agents out there. And for those not familiar with mobile money, so agents is a bit of a mix of a bank branch and an ATM. So they're a sales point, but it's also a cash conversion point. But equally, they're a bit of an education point where they can actually help you do a transaction or tell you how to complete a transaction. Or if you have any questions or something goes wrong, it's a kind of a human interface you can talk to and kind of troubleshoot to make sure the customers can achieve what they want to do. there are 37 markets out there that have more than 10 times agents than bank branches and ATMs combined. And I think what's important to call out, and we do this a lot, this is an industry that supports a lot of job creation, and a lot of the value that is being generated by the industry is being paid out to small local businesses. And it's a very good story for local regulators. It's a bit of an issue when you try to convince a CFO to invest in this business, because the direct costs are so high that it really can hurt the margin when this becomes big business. And it's important to, as a reference point, a mobile operator in East Africa maybe has a turnover of $1 billion or so, and mobile money now represents 25% of that in East Africa, and I think 10-15% in West Africa. So it's becoming quite substantial part of their business, and this margin, of course, makes some people in that business a bit, or start asking a lot of questions. But I think in terms of job creation and supporting local communities, it's a very, very compelling story. One area that is really, really interesting right now, I think, is because of these kind of services are growing bottom up and establishing these cash conversion points, these agents in the markets, and a lot of customers are comfortable to transact through the mobile phone, often for the first time, often they don't have access to bank accounts before. They're combining these assets across borders and regions. So they support regional trade, they start really cutting costs in moving money across borders, which traditionally, as someone pointed out earlier today, has been very, very high. So this is also a little bit why we're interested in new technology, and it's interesting to see what companies that are playing around with blockchain or building their business around blockchain, what they can do to help reduce some of the capex investment that is associated with the cross-border transactions, but also with kind of what can we do about settlement? Because when we try to do new initiatives around this opportunity, you often bang your head a little bit about the settlement issue, which still often in the end relies on correspondent banking in the background. Important to point out, when mobile money providers connect across border, usually the customer cost and the customer fee is reduced in half. And I think this is one of the sustainable development goals, to kind of reduce this cost, and I think the industry is showing real promise in delivering on that so far. Just quickly, I think this used to be a Kenyan story, then it became an East African story. Now it's much more than that. I think West Africa is the real new star. Cote d'Ivoire, Ghana, Mali, all these countries, Senegal. Mobile money is becoming very, very successful, which is great to see. Also in South Asia, mobile money is growing very strong. There was new regulation in India that has been fueling this a lot. A lot of investment in Pakistan that is behind the numbers. For those of you who've been in the industry for a while, there was, in the beginning at least, there was this kind of debate around, should you allow non-banks to play, or should this be just for the banks? I think we're a bit beyond that now, which is great. I think the industry has proven what a non-bank player can achieve in the market if they are allowed to. A lot of thanks to the work that Sasha has been doing to have more enabling regulation out there. So one example of this is we see the connection between banks and non-banks not only are the connections increasing, so they're I think they're now over 500 banks connected to mobile money deployments. A lot of it, what's holding this back is actually technical integrations. So it's one of the areas where we're trying to address. But also the transaction volumes are increasing at quite a rapid pace. And I think there was a question earlier around, well, shouldn't we just use airtime for this? And I think one of the biggest reasons why we shouldn't use airtime, why that's not really an acceptable alternative, is that we shouldn't really create a separate system for people who don't have bank accounts. It should be a system, a regulated e-money system that is interoperable with the banking infrastructure. I think that's when things get interesting, and that's what we are advocating for, and that's actually what's happening in the market. Another statistic is there are now 19 countries, up from 16 last year, where there are more mobile money accounts than bank accounts. The majority of them are, of course, in sub-Saharan Africa, but also in there's one or two in Latin America as well. So one of the things that I've been working on a lot, is of course interoperability. Like I said, fragmentation is an issue. People need to be able to transact across different providers, different systems, between banks, between non-banks. Like it was for a long time a bit of a contentious topic. I think it's great to see that there's a flora of different solutions out there now that are live. In Pakistan, we see non-banks connecting to the kind of the banking infrastructure that is actually allowing them to connect, which is great news. That's not the case in every country. In Thailand, there's a card scheme providing this interoperable solution. In sub-Saharan Africa, often due to the lack of financial infrastructure, as I think Thomas pointed out earlier, they connect actually bilateral because they have no alternative. It also allows them to control costs. In Latin America, it's a lot about the industry coming together to create a switch, a physical infrastructure. And in the Middle East, it's a lot about a lot of central authority. A lot of central banks want to have visibility over the transactions, so they actually provide and put in place the infrastructure themselves. So it's great to see that 2 years ago this wasn't really happening. Now we're in a more mature environment. Operators want to connect with each other, but also with banks and a lot of companies who wants to innovate and use this as a kind of a payments solution for their product. And maybe just one more thing, maybe I should have said this in the beginning, but this is based on data that we collect every year. And we kind of looked at the data that we collected, we looked at data from how bank accounts are growing, and we looked also how the smartphone penetration is growing. And we actually saw that smartphone penetration is the one thing that's growing fastest right now. So a big question both for banks and non-banks will be that in 2020, the majority of the mobile phones out there in emerging markets will be smartphones. So there will be there's a lot of opportunity in the coming years to really have a more rich interface. Because today, one of the things that makes it very difficult to be successful with financial services in these countries is because you have to use a very kind of rudimentary interface that is very, very suboptimal for everyone involved, I think. We also see a lot of investment coming in. So the combination between smartphones and investment, I think, makes this a very interesting space. And of course, the players who are already in it are continuing to invest as well. So that's a little bit of how the industry is performing. And I hope that's going to be a good kind of background for the panel discussion. Just one more thing before handing it over to the panel. One of the initiatives that we're doing right now, and I know some of you guys in the audience are participating, is to try and create a joint interface. Because one of the big barriers now, because they have all these assets, they have the agents, they have the customers, a lot of companies want to get involved, want to partner with them, a lot of banks want to connect. The technical integrations is very painful, and it's very different from provider A to provider B. So we're trying to build a harmonized interface together with our members, with operators, with the platform providers who are providing the transaction platforms, and all this group of companies who wants to connect. So I would invite anyone to get in touch if you want to participate and influence what the solution will look like. Some of you guys in the audience are already, so thank you for participating. I think that's the only way to get this right. And we'll be sharing the first draft or the first version in July in an event in Dar es Salaam at the end of July called Africa Mobile 360. So cool. If you have any questions, find me in the break or after the panel. Thank you.
Thank you, Gunnar. So we just heard from Gunnar about the state of DFS in the developing world. We'll narrow our focus in the panel discussion to the uptake of digital finance in the developing world. And I'm delighted to introduce the panel to my right. I've got Anne Camareo from Boloro. She's the CEO at Boloro. Dooley, lead global financial inclusion at the World Economic Forum. Kwasi, Donkor, director digital finance at USAID. Dalia, Cohen, who's group executive Econet Wireless and group CFO Cassava Connect. And Vince Kadar, CEO of Telepin Software. So the mobile money industry has grown significantly over the last few years and is reaching 61% of the developing markets. Account registrations grew to 411 million in 2015. However, of this number, only 32% or 134 million accounts are active. Now, based on the active account definition of one transaction in 90 days, this figure highlights that account usage remains limited, with P2P and airtime purchases dominating the use cases for mobile money globally. And in South Asia, OTC, the prominent use case for mobile money, challenges of uptake in DFS remain. And to discuss these challenges and potential solutions, I'd like to direct my first question to the providers. So from your organization's perspective,
It's not distracting.
sorry.
Go ahead, you can continue.
So from your organization's perspective, what are the one or two major barriers that you face in the uptake of DFS? And what are you doing or planning to do to remove those barriers?
Okay, I'll start. Can you hear me? Is this working? So I'm from Cassava Connect, which is a name people don't really know. What we do is we oversee EcoCash. And it always saddens me when I come to these conferences because everyone talks about M-Pesa. And EcoCash is the second largest mobile money in Africa. Behind M-Pesa, we have, we moved last year $6 billion through our services. And we have since expanded into Burundi, Lesotho, and South Africa. And what we've been talking about a lot today is the scaling. And I think the thing that we should not forget when we talk about scaling is that I can talk to Africa because that's where we're based, but Africa is in fact very local as well. And so before you scale, you also have to make sure that you have buy-in locally. So you have to know your consumer, know what the pain points are. We definitely need the infrastructure, which is the agent network, and we need enough people using the service. But to get to that service, the biggest barrier is behavioral change. So you have to address pain points and then spend a lot of time very hands-on doing a lot of uptake and education and marketing so that the consumers understand and trust the service as well as has the access, which is a distribution point. And just to put that in perspective, I'll just give a few examples. The one recent example is you can't just take what works in Kenya or Zimbabwe and translate it elsewhere. M-Pesa, which is wildly successful, announced a week ago that they're withdrawing again from South Africa. South Africa is an entirely different market. It is more banked. Social grants go to retail services. The agent network structure is different. So you actually have to know who your customer is. The urban to rural generational ratio is different. Another example is for savings. We're doing a lot of work in savings. We're doing a lot of work with savings clubs in women. And you can ask questions that might be obvious to you, but they might not be relevant to your customer. You can say, do you want to save for school fees? Everyone says yes. You put together a product that allows you to put aside money for school fees. Nobody uses it because people cannot afford to tie up cash that they might need if one of their children gets sick and they have to address a medical need. And then the last example I'll give, because I'm taking a while, is insurance. We do a lot of funeral insurance. This is different between the north and the south of Zimbabwe, let alone between Zimbabwe and Burundi. So you have to know what the burial rituals are and the different nuances are locally to make sure that there's uptake locally before you can think about distribution and scale.
Anne or Vince?
Well, from a technology provider, and we at Telepin, we are a technology provider, so we power a lot of the back-end systems in Africa, Southeast Asia, and Latin America. So we For example, we're in the neighborhood of we power Tigo Cash in Tanzania, Rwanda, DRC. We're doing a deployment right now in Botswana. Over 40 deployments so far in Southeast Asia. We're in I'd say a hybrid market in Singapore. It's very much a developed market, but actually it services the developing markets around it. So we're powering a system to do international money transfers, where Singtel's decided to compete with Western Union and MoneyGram and launch their own money transfer network. But we're also powering the merchant payment systems. In Latin America, we're deployed in Panama. It's a very similar market as Singapore, where again, you've got a lot of migrant workers that are coming to Panama and then sending their money home as well. What we see as far as, again, barriers actually, and we look at it, we're I guess one of the very few providers that can look at it from a global perspective. Those customers that are very successful, actually, they've really got the formula correct. And it's the market conditions that exist as well, where you're solving real world problems in forms of security and convenience. Those that don't have it right are really struggling. And, they've struggled actually from, again, their go-to-market process. Maybe they're trying to, and what we've seen at times actually is that they're governing from the ivory tower, and they're not putting the field agents out on the street in order to really educate the end consumer and the end customer and to build that agent network. And if you look at, I think, markets like Econet and you look at markets like, M-Pesa, they continue to invest and invest and invest and invest, and until, one day, 3.5, maybe 4 years later, bingo, you're profitable and you're able to really actually pay a dividend back actually to your investment, and you become profitable. What we saw in the early days as well was that there was a lot of people that were just playing in this market, and I think actually Gunnar could probably raise his hand to that, where there was a lot of toy systems that were out there where it was like, I got to throw my hat into this market because there's mobile money and I need a system. It's a value-added service. I'm a telco. I don't really understand it, but let's just say we do it. And so they put it in. They say, check, I've got it, and where is everybody? How come nobody's here? I've got a party that I've created, nobody's shown up. And then one day it does start to materialize. They start to see the impact. But now their technology is falling apart. The foundation is started crumbling, and I'll put up my hand and say, "Here's Telepin. Actually, we are here to solve your problems. Actually, let me migrate you off that junk, and I'll show you a real world system." What we like to do is we like to make sure that when I put a platform in there, when I put the technology in there, whether it be for an Econet or it be for an independent sales organization, is that I set it up, it's there, you can do what you need to it. You don't have to come back to me to hey, can you configure a zero-rated promotion or a transaction for 1 week for this particular area, et cetera, et cetera, et cetera, or can you help me onboard merchants? I don't want to do that for you. I want you to do that for yourself. I want you to be self-serving. So my role in this is to put a system in place and to educate my customers so that they can actually run their business and not have to come back to me actually for for everything that needs to happen actually. But again, I'm the manufacturer, but I don't want to be the guy that drives the car at the same time.
Thank you. And
I would just, is this on? Hello? Hello? Okay. So I would just add to that what we're working on and finding is the next step after everything gets started is adding in interoperability and adding in the places for people to use their money. Because you get money put on a wallet and then you have nothing to do with it other than send some money and look for a place to cash out. So interoperability is basically a way to where we don't want to compete with anyone here. And everyone who's in payments out there, and I know a lot of you know payments, the value chain is the same here. It's just making sure that we've got all of those pieces together and trying to turn closed loop systems into open loop environment so that you can really expand everyone's reach without having to have everyone duplicate the same thing. So imagine a merchant having to connect to 4 different mobile operators. It's hard enough to do it once, let alone do it 4 times. So it's working with all of the wallet technology, all the technology providers. So interoperability for us is really important. The other thing I would say is that we work directly with the central banks to weave this into the government's strategy for their citizenship. so that you start working on ways to have standardized cash in at the salary level, standardized donor payments, standardized beneficiary donation. So putting all of that together into some type of an order where you get the drivers for this whole value chain that we all know to be there is basically, from beginning to end. So it's a lot of work, it's a lot of different components, and all of that said, the thing that seems to move it faster is to just get the first example out there. Because we talk about all of this and we're experts in it, so we understand it, we get it. But we're asking a lot of people to change. We're asking every part of that value chain to change. That's a lot of change. So it's hard to get it theoretically. It's a lot easier if you can just show it and you can really have that case out there. So my experience is find your killer app. Find the use case that has the most pain point and has the most publicly visible use case so that there's really not even any marketing required. It's just something that clearly makes everyone's life easier. So I would say that's Balero's experience as we've been going through Africa, Middle East, and South Asia. And we're picking up steam now. And it's just really, once you get the visibility out there, then everyone says, yeah, that. But it's a lot of dialogue and it's a lot of local market, feet on the ground, having that conversation across the whole value chain. So I would say that's been my experience.
So Chris, Kwasi, you just heard from the providers about the barriers to uptake in DFS. So at the World Economic Forum and USAID, what are you doing or what do you intend to do to move the needle, especially when it comes to evading or removing these barriers to uptake?
So I can get started. So at USAID, I work on a digital financial services team, and our role there is to look at how we shape the financial inclusion strategy of USAID. The mandate really there is to expand and accelerate the uptake of low-cost payment systems, including mobile money. And to do this, we leverage the spend of USAID across about 80 countries that we are present in, and this is a spend of about $20 billion annually. Now, there are a number of ways that we do that. There are a number of ways that we directly influence the ecosystems. We use a number of instruments, and then we also use a number of partners that we work with. And when it comes to the number of the direct influence that we use and how we approach this, it's across a number of levels. So at the macro level, really what we are talking about is finding ways to work with governments to encourage transition to e-payments. And so we work with organizations and help stand up organizations with some folks who are in this room, like the Better Than Cash Alliance, right? And so you become a member of the Better Cash Alliance. It's really an indication that you want to digitize your payment flows, whether it's things like social protection payments and so on and so forth. The idea there is to help drive demand aggregation, because part of this is also ensuring that you can actually pull the product and ensure that there's a clear value proposition for customers as well. So there's a demand aggregation component there. And then also is to act as a convener in some of these markets that we work in to bring folks together who are like-minded, who understand that you want to address some of the regulatory and competitive issues in some of these markets. So in Malawi, for example, we did something like that where we brought some of the players together to be able to stand up and understand what it would take to drive mobile money in Malawi going through MM4P. Using the UNCDF as well. And then on the meso level, we work with a number of MNOs, and here we work with organizations like the GSMA and also work and understand and do country diagnostics in a number of different places where to help us also better understand what it's going to take for digital financial services to be successful within a market. So you take a market like Myanmar, and I know somebody mentioned Myanmar. What exactly is it going to take? Because we already have a presence in some of these markets, and we want to also help drive some of those and remove some of those supply constraints to the growth of digital financial services. So we work with the MNOs and with available players and like-minded mission-aligned stakeholders to allow that to happen. And then at the micro level, there is a lot of funding that goes into some of these things, right? So we have a number of mechanisms like challenge grants that allow us to go into a market and say, okay, what if we're able to design something using and finding a way to sort of speed up to the top. And you have access to things like a Development Credit Authority, which goes and helps de-risk opportunities and de-risk investments for some of these players. Or you have things like the GDA, or you have some of these challenge grants. So similar thing happened in Haiti after the earthquake, where we helped stand up some mobile money players in that market right after the earthquake. And these are some of the things that we do. And then ultimately, we also have presence within the markets that we work in. We have partners like MStar, which is here out of FHI 360, and NetHope, who actually are in the markets, who provide direct technical assistance either to the MNO or to the governments to be able to drive the growth of some of these things. But ultimately, what we're trying to do here is to just look across the markets that we work in, try to drive that demand aggregation itself, and then also, remove the supply constraints. There are two other areas that I'll also mention very quickly. It's just some of the instruments that we use. So across these 80 missions that we work in, these 80 countries, 80 plus countries that we work in, each of these missions have access to or are working with what we internally call the procurement executive bulletin. It's shorthanded PEB. Essentially what it is saying that if USAID is going to work in a certain market and we're going to be working with some of these implementing partners, there's a mandate for you to, as a default payment option, to use e-payments. And these are some of the things that also are going to drive, we believe are going to drive uptake of digital financial services. I mean, there's a number of things that we can go into, but let me just let Chris also jump in here and talk about this.
Thanks, Kwasi. Yeah, don't worry, I'll talk about quite different content. So if anyone hasn't seen me speak before, just be aware that I tend to play devil's advocate. Not everything said here today is the official position of the World Economic Forum. So to start with, I'm not sure entirely that we are going to address the barriers from these providers. We'll address barriers that the people need addressed, the people whom we want to see becoming less poor through digital financial services. Whether it's through one product or another, we're kind of agnostic. And in terms of digital financial services, we sort of see that as anything that involves a 1 and a 0 rather than a piece of paper. So it's not just mobile money. And we see so much attention and money and efforts on mobile money that we're trying not to really play in that space. So sorry, everyone. That's looking pretty good. USAID Gates got it under control. We're trying to help anything that doesn't have as much support. Of course, if it's mobile money that needs the support in a given market or a given context or a given geography, sure. Whatever needs the most support, whatever has the biggest gap in supply of donor support is where we would want to be useful. So with that opening, I'll briefly explain what World Economic Forum does, and then I'll actually tie it back to how that can help some of these barriers that have come up. So, unlike many organizations, we're not really trying to play much at the global level or the policy level or the enabling environment level. Our goal is really to work in select countries, just a small number of them, and try to shape a very coherent approach to executing projects in those countries with many, many, many actors that collectively can have an impact on a large number of people. Go into that in a bit more depth. So think of it, though, that we're not the funder. We're also not an executor as a World Bank might be with a big project, but we're trying to pull it all together to make sure it all looks good as a coherent whole with all the various actors. And the way we do this, having selected a few countries, and right now we're in India, Indonesia, Colombia, and Mexico, we create a national community of interested parties under a government body, but then bringing in all the appropriate private sector actors, other regulators, government entities that are not regulators but actually are in the market in their own right, and donors, NGOs, whatever, to get all the right people in the room. And I think as the World Economic Forum, we have the biggest reach into the private sector versus any other part of the ecosystem. And also we, I think, have a bigger reach into private sector than almost anybody else. So we try to focus on that. We would link up with other agencies, USAID or providers or government, to bring in some of the non-private sector. So our thing is really to make sure we have the right selection of private sector CEOs in the room, not just from the traditional banks and mobile money operators, but them, of course, as a minimum, but also consumer goods, agriculture, investments, insurance, other sorts of distribution networks, which might be useful in the endeavor of having a national, broad-based impact on the amount of financial inclusion in the country. Having brought together that community and formalized it with letters signed, we pick a problem to solve. And in Colombia, for example, the problem we're trying to solve is changing the behavior of small merchants to make them better accept digital payments in rural areas. That's it. But we're going to try to do that really, really properly. So we have 60 organizations in Colombia signed on to this project, or in the process of signing. We have 18 individual sub-projects to achieve this goal. It's becoming part of the government's national financial inclusion strategy. We will not necessarily be running all these components, all these sub-projects, but the hypothesis, for which we cross our fingers, is that if all of those 18 are done, that problem will be more or less solved. Small merchants in rural areas will be able to accept digital form of purchases, acceptance network will be there, and the issuance and demand from consumers will follow, or will be being worked on by others. Now, when you have 18 sub-projects in a large work stream covering a country, obviously you need a lot of people to do a lot of different things. Our job is to be the project manager of last resort. So if something's going to happen organically through a few private sector actors, or if it's being led by a donor or a government agency, we'll just help make sure that there are appropriate monitoring and evaluation methods in place, that it all matches. If there are a few sub-projects left that nobody picks up, that's where we will be happy to jump in. And if something needs resources, technical or money or humans, we'll try to match resource needs to resource offerers. We don't ourselves do grants, but we're fairly good at facilitating the appropriate matching. And we will offer, to whatever degree it's needed, support for strong coordination in the country on this topic. And that brings me back to a barrier, which is when there are many, many initiatives and there's even a lack of alignment about what do we mean by DFS? Is it just mobile money, or is it also branchless banking? Or is it even branch banking? Actually, when I go to a bank branch in New York and use my card at an ATM, I consider that digital. But who knows? Everyone's got a different view. So until you even have a common language about what's in scope, I think it's very hard to find synergies and avoid duplication and avoid gaps in an approach where there are many actors in one country. I mean, pick any African country, there's somewhere between 20 and 50 organizations running projects in this space, and that's just based on the list on Making Finance Work for Africa. And I've been told that that list isn't even complete. So coordination, I think, is the biggest barrier, and our role to address the barriers that you guys have identified is to invite you to the room when we're having these meetings and see where it goes. But just so you don't think that all we do is digital payment acceptance in rural areas, another case in point, we just went out this morning. We are helping develop some standardized approaches for humanitarian payments. We're calling it the Principles for Public-Private Collaboration in Humanitarian Payments. But the real goal of this is to have standardized contractual arrangements. And through standardized contractual arrangements, you'll have faster and more effective contracts. And that hopefully will lead to better chances for white label product distribution, shared verification or retail level interoperability in humanitarian crises, or just generally fewer excuses for people to say, oh no, it was too hard for me as a payer to contract a paying private sector organization. I had to set up my own system as a UN agency or as a donor. So that's quite a different thing from retail acceptance in rural Colombia, but again, it's still quite a small piece of the puzzle. We're going to try to bite it off and see if we can chew it properly. I'll pause there on what's our role in trying to unblock barriers, but for anybody who wants to discuss further, feel free to reach out to me through the organizers. Thanks.
Thanks, Chris. The next question is for the panel. What are some of the risks that could derail your initiatives when it comes to the promotion of DFS?
Regulatory is a huge risk. I think there's the KYC and the AML in all the countries are incredibly important if you want uptake and support of mobile money, digital payments, trust, international investment, interoperability, and all of these get more and more complicated as the regulatory environment is completely different in each country and across countries. And I think related to that is the integrity of the data, which I think ties in. So I think regulation is a very big piece and currently a big risk.
I'll support what Dalia just said, and I'll add to that although we are going down a path of interoperability and interconnect, what that also is doing is adding cost as well. So the more hands that you've got at the table that are interconnecting, and you're handing off from one network to another, in order to get to the payment to the far end, the more cost you're adding into it. So at the end of the day, I'd be interested to see where we are in 5 years' time if the costs, in fact, are going down when they're being transmitted, or in fact what we've done is we've inflated it and it's really a developed market actually transmission versus a developing market low-cost system.
I think I'd also piggyback on the regulatory bandwagon, but looking at it from the consumer protection lens, right? Making sure that consumers feel like they have redress and recourse if they go in and do a transaction and they're not able to complete that transaction. The core of it also, relates to the value proposition of these digital financial services products. Which mobile money is just a subset of. One of the things that we do, at least at USAID, is to work with some of the other agencies, like Treasury Department, for example, to work with the Office of Technical Assistance to help under capacity central banks understand and improve their ability to do supervision of these new emerging types of points of service for agents, for customers. And so consumer protection is key, making sure that a consumer can provide feedback to the regulator about something that is happening in the northern part of the country so that the regulator can target better its supervision ability.
I'll say that I think the biggest risk for DFS growing and having a larger impact on human beings is subsidies that are granted on a non-competitive basis. So for instance, pick a donor darling, get a big grant because they're known as a likely winner that you should pick. The subsidy means that donor darling has a natural monopoly to innovate in that market, and it crowds out the smaller people who weren't on the list of donor darlings from being able to innovate. And then you usually get a project that didn't work because no one had to worry about commercial sustainability, and you have 100 million accounts which were purchased with that $20 million grant, and those $100 million accounts achieve nothing except a successfully distributed grant.
That's a really good point. And in fact, I would say I find it so much faster to just do a commercial transaction than to do a transaction where we have to include the government, third-party aid organizations, all of the think groups along the way. So honestly, when we can do just business, it is so much easier. But that said, we're going from, in many of these places it's greenfield. So you can't maybe go it alone, and we shouldn't go it alone, because in the end it really does need to all be connected together. So it's getting that common agenda, getting everyone in understanding how they all link together, because I think as we get started, many of us think, oh, wait a minute, we're jostling for our time and our space instead of figuring out how we all work it together in a commercially viable way, so that this isn't charity. This is a very potentially profitable business that can provide value. Now, that said, the second thing I would say is we need to, amongst us, start figuring out what that extra value add is on the consumer side that will allow us all to play. And I think it's companion apps. So the companion services to payment that we can find in each one of these cases, because we're kind of process re-engineering from cash here, right? So what are those companion apps? And for me, it's some type of loyalty or rewards where a merchant can have some value that they can get by doing digital money instead of cash, so that they can offer something to their customers. Or it's data. and allowing them to do better vendor management or better inventory management so that they can increase their turnover if they're a smaller merchant. So those two companion apps can be very compelling to get merchants to want to electronify and to get consumers to find benefit in it and to get maybe those third-party manufactured goods companies that are really driving a lot of these economies to participate in this as well. So that would be my point.
Nice. So the final question, and it's again to the panel. What will serve as the inflection point in the scale of DFS?
I'll start this off, actually. I think part of it is going to be a mindset. And I wanted to add, actually, at least just, because we run workshops in some of these markets where we go to, where we're interviewing CEOs of banks, CEOs of telcos, and then doing some field work ourselves just to really understand what the use case is and how do the end recipients or the end users, our customers like the product. And a lot of the time we've asked some of the end customers, why do you use mobile money in this particular market? Why do you not have a bank account? You've got access. You could have a bank account. And somebody stated in a very simple story. When I put $100 into a bank and I don't use my account in 30 days, what's the balance at the end of the month? Now take the same analogy actually and say, if I put $100 in airtime into a telco and I don't use my phone for 30 days, what's the balance of airtime sitting in the network? Are there any bankers in the audience? What's the balance actually at the end of the month of my account? Exactly.
Which raises a whole question of why are we trying to get people into the deposit money system that was never designed to serve consumers, and in fact never served consumers in the developed world until the 1980s.
But the African CEO of a bank actually, he put it simply, somebody's got to pay for my tie. But I think the telco actually CEO also wears a tie as well. But it's a different mindset. So why aren't fees tied to usury, right? If I don't use my account in 30 days, then I don't have a fee. If I don't use my phone in 30 days, I've never had a fee. But when I use my phone, when I text, then I assume fees. I understand that. And this is what people understand, actually, and it's the trust, because the trust of that simple user, the user in Africa is that bank CEO stole money from me, whereas that telco, I completely trust.
The objective function of banks, take money out of the pocket of the poor and put them into houses and rent.
That's what's got to change. It's the mindset that's got to change of the people and the people that are running these organizations. I think that's part of actually what's going to make it a success for if we really want to solve the problem that we're trying to solve.
I think what I'd just like to add to that and to switch. Is my mic now on? Great. Actually, to dovetail on something you said in an earlier statement about a lot of launches without successful execution and something that Anne was actually just talking about, and about Chris and Kwasi were talking about it with coordination, is I think what would be tremendously helpful is mindset and collaboration. And I'll give a shout out to MasterCard, because I've sat next to about 3 different MasterCard people so far, so they're everywhere today. But thinking about not what the industry is, but what the industry ought to be. And we all want to do well, but we also want to do good, and to support the consumer, to find a collaboration whereby we have a Visa, MasterCard-like business where everyone runs their own business, but there is a strong collaboration across the players. And the same happens in the banking world, even if they're taking fees, and to find a way where we can get scale by having a sort of centralized support. I think would be the inflection point. I don't think we're close to it yet, but so much effort has been spoken about in the mode of all the different collaboration and coordination efforts that we're hopefully going in that direction.
I think that there's, at least from the USAID perspective, there needs to be and I see that a lot, of course, with Gates as well, but an investment in the underlying infrastructure and a reconfiguration in a way that financial services is delivered to the poor, right? A number of things underpin that. So number one is adopting a shared vision across private sector, donors, governments. Number two also is investing in the enablers, right? The connectivity. So for us to be able to go and do bulk disbursements in the northern part of the country, which is rural, first of all, you may not even have towers there. You may not have access to cell phones, and connectivity is limited. So finding ways to invest in some of these enablers, and then also looking at cases for building inclusive, the business case for an inclusive payments, such as G2P payments, for example. There's also looking at pursuing a platform approach to a lot of these different things, right? So if I take something like mobile money, you talk about liquidity that agents face. Is this something that one MNO needs to support, or should it be something that is resolved at the industry level? So these are some of the things that we need to talk about for us to be able to ensure that these businesses can grow. You're starting to see a lot of that, but as we sort of go down this path, we believe that there's a lot that a lot of dividends that can come out of this.
Thanks. I'll just add that, in line with others, the problem is not getting solved in 2016. We're not going to reach the magical tipping point in the next couple of months. I've been on this conference circuit for a while now, and the drivers identified right now seem pretty accurate, but 2 or 3 years from now, it'll probably be a bunch of other stuff. So I won't try to give you the magic answer, but what I will do is say, when it looks to me like DFS is as profitable as car loans and phone calls, that's when I'm going to see with my eyes that we've achieved it. That's when the tipping point will start to go. So at least I know what I think it looks like. When it's so profitable that you have syndicated car loans going out with automatic approval, and they use that as a hook to get someone to buy a car. When DFS is that profitable, there are that many organizations in the value chain pushing that out and making millions and millions of dollars, and it just scales up to a saturated part of the market, just as phone calls do too. We all make phone calls. A lot of people make lots of money off those. That's when I'm going to see DFS rolling up. I will say, though, little problems like bank account fees. And just give a shout out to the first country in the world that mandated fee-free accounts and fee-free ATM transactions. Good job, Australia. A lot of people could learn something from you.
Thank you. I'd like to open the floor for questions, and I'd like Gunnar to also join the question and answer session. Maybe we can get you a chair. We can squeeze down a little. Yeah.
I've got a question. My question is, I see a lot of value that can be added by these global policies for financial transactions digitally. However, and yes, it can help for the disbursement of funds for NGOs. It can help to avoid graft at a local level as well. But one of the things that I could see that could be an impediment is when you talk about rural businesses, you have a lot of people adopting mobile phones throughout third world countries because they are getting infrastructure that leapfrogs the typical landline to Wi-Fi and cellular. They're just getting cellular and satellite automatically. The downside, of course, is that they don't have these kind of infrastructure being built in a rural area. So if you're encouraging entrepreneurs to use mobile-to-mobile payments, it would seem that you should be basically collaborating and working with telephonic companies and local service providers and essentially making them give away phones and giving them a portion of certain fees that are collected on transactions as an incentive to do this, to basically incentivize the adaptation of these technologies, the cell phone towers and such, throughout these countries outside of just the city regions and pushing rural. And are you all considering these kind of partnerships with telephonic companies throughout these third world countries in order to push the adaptation of cell phones throughout the country so that people will do these things?
I'll take that as I do represent a telecom company that's based in Zimbabwe. I'll tell you that we have 6 million subscribers and 70% of the adult population is on EcoCash. We have 27,000 agents, and most of those are in the rural areas. And so I think the key to get the rural areas involved is, yes, to have access to phones, but most people almost always, a lot of people will pay their phone bill before they pay their gas bill because that is their lifeline, and it's their access to the rest of the world and communication and to their businesses. So I think the key is to have an agent network that has both security and liquidity in the rural areas. And for that, you need to make sure that it's profitable and safe for the agents and that they can get the liquidity they need. Because I think the phones are there. And I think the phones are purchased and the prices are becoming lower and lower. And a lot of this is still feature phones. It's not smartphones and you can do everything you need with a feature phone. We're still predominantly a feature phone in Zimbabwe. But like I said, we have 70% of the adult population, and that includes the rural areas. In fact, it's mainly the rural areas.
Hi. You talked about expansion into Burundi, so I guess I'll use that as an example, even though what I'm saying applies to a lot of African nations. So Burundi in 2015 experienced a coup attempt, and it ranks near the bottom in teleconnectivity, and it has a lot of emigration. So two things. The lack of teleconnectivity obviously influences mobile-to-mobile payment, but the emigration also impacts your business in the sense that the people who would make use of things like insurance and school funds are leaving the country. They're not there anymore. So would you say that like Africa, in the sense that it needs these alternative investment methods, but it's also a double-edged sword in the fact that it needs these investments might be a reason not to invest there. There's a lot of risk involved inherently.
I will say that Burundi is, there is education. We're at the beginning of building it up. We're not quite where we are in Zimbabwe. But the one thing that we actually haven't talked about here, and thank you for opening this up, is the diaspora communities. Because I think in most African countries, the GDP of the diaspora is often larger than the GDP of the country. And so the diaspora communities will support paying for school fees and paying for power, and they will send a lot of remittance money back into the country, and a lot of MNOs and businesses, as Vince was talking about earlier, are building their own. We own our own remittance platform, and we support helping send money back into the country because the diaspora is an extension of the country. So it's essential for places like Burundi, where people who can't get out do need access to funds that are being sent in.
Last question.
Just to pick up on something that was one of the last things said, Joe Colangelo, Consumers Research. When we're talking about the Australia rule, hey, we're not going to be we're not going to be permitting transaction fees on these P2P transactions or anything like this. This is such a nascent technology. When we applied similar rules here in America to a very old technology, credit cards or debit cards, the Durbin Amendment to the Dodd-Frank, we said, hey, you can't charge this much money. Suddenly, the banks couldn't make that much money, and so they started charging checking fees, and free checking went from 70% to 40% since then, and it increased the unbanked and underbanked here in America. Does the entire panel agree that we should be coming up with these mandates and using Australia as a sort of benchmark in the future, or do we think that maybe there are more unintended consequences to such broad actions? Yes, the gentleman in the red sweater, please.
Well, you'd be pleased to know that the Faster and Secure Payments Task Force is chaired by the Federal Reserve to fix the embarrassing state of the US payment system. Took into account about 30 country analyses and thought about what would be relevant for not only just the states, but also for which state in the states. So I'm hoping that they put a bit more brain power into it than that. But I mean, truthfully, I think the real question is, how worth it is it to do mandates when they always have a downside? And I think you have to take that decision very, very, very carefully. And if the decision is being driven by a governmental office that has votes around its continuity, then there's a risk that there will be fake mandates done to try to win an election. If it's being done by someone who's trying to stay in power or get a big grant, there's risks that they'll do a mandate that will have downsides in that regard. I think serious transparency and serious inputs from experts who've done this in 20 or 40 countries, and those people exist, are crucial to avoid silly mandates. I don't think mandates should never be done. I've seen many, many, many which were highly effective. I think blanket never have a mandate would also mean you don't have a police force in the country. So you've got to have a few decisions by the government, but you've got to be very careful when you make them.
I say we just wait and see in 5 years actually how the Australian banks are doing from a profitable point of view.
That's right.
Challenge accepted.
Yeah,
Thank you.
I think maybe I can add one point. I think because we have this conversation with regulators a lot, I think there's a lot of impatience from regulators, from actually the donor community around this. So you want to see prices go down, but it's very, very important to remember that this has to be driven by sustainable businesses. There has to be some time. This is a very young industry. There has to be time for us to find this kind of business models. I think prices are going down, particularly on cross-border, also on domestic payments as well. So yeah, there is a temptation for regulators to step in. I think it's very risky, particularly in emerging markets. In more mature markets like Australia, maybe it's a bit easier.
Less risky.
But also, I'm from Sweden, so there P2P between the bank association have an app that everyone is using, and P2P is free, and that's kind of the key to remove cash from our society. So I think it can happen without mandates as well if the industry is successful in collaborating.
So one final question, and we can continue these conversations over lunch and coffee.
Okay. So my question may be born out of ignorance, but the reason why you have fees in bank accounts is because the banking industry in most developed and non-developed countries have a fixed cost structure which you cannot get rid of, and that's compensation. In the U.S., about 50% of gross revenues goes to compensation. On the lowest side, it's about 32%. The technology now exists, distributed ledgers, Bitcoin, et cetera, where you could take the transactional portion of banking and automate it, smart contracts. Not very difficult at all. Most university students have studied enough where they can do it. And all you need is a stable unit of value. The Bitcoin is more stable than euro over the last 6 months by a large margin. So anybody who's willing to transact in euro would be safer transacting in Bitcoin. This is just an example of, I guess, my stated ignorance as to why attempt to replicate a acknowledged broken legacy system when you have a new card outrace the old legacy horse. Open to everybody.
Can I just jump in here? I think there is a lot of new tech being used in the mobile accounting platform. So I don't think anyone's out there trying to emulate core banking systems. So rest assured, that's beyond backwards compatible. That's like, we're not going there. So new tech's going to continue to evolve, and the structure for setting up the transaction versus the core account tech is going to continue to evolve. And blockchain has a chance to be a good part of that, as it has to do with immediate settlement and clearing, right? That, as I call it, the transcendental ledger is a great thing, you know. But we got a few steps. To me, that's the next gen of next gen in mobile payments, and we should keep our eye on it. I have zero interest in adding another currency to this. Let's just stick with the ones we got right now. But the technology of it, yeah, and we're already going through the efficiency, you know, to apply as we get to mobile. I think we've got a few other challenges in it right now.
I might just add one line very quickly, because it's my fault that we're talking about bank fees in some degree. The ideal situation is you have perfect competition. Consumers and suppliers all make the average amount of profit. That's economics, right? That's what we're aiming for. We don't want a monopoly. We don't want an oligopoly. If there is one, and it's resulted in 5 big banks in Australia charging fees, or 1 big provider in Kenya charging fees, or 2 credit card companies charging 10% fees in taxis in New York City, because it's an oligopoly, a competition organization which represents the interests of the citizens needs to jump in. If there are no oligopolies or monopolies, I don't think the government should be involved, and there should be unlimited products going to unlimited consumers who transact on a liberalist, capitalist basis.
So as you can see, we won't have all the answers today, but it's important to continue these conversations at an industry level. Thank you, panel, for your insights and thoughts, and over to you, Jason.